On today's hot sheet, I'm discussing housing inventory by state, weekly unemployment data, PPI release, and retail sales reports for February 2024. Today is Thursday, March 14th, 2024. I'm Byron Lazine, and the hot sheet starts now. Good morning and welcome back into the hot sheet. Let me know in the live chat which market you're tuning in from. Of course, to get the most out of what we do here at BAM, join BAMX. Use code HOT to get 10% off of BAMX. You get access to the hot sheet show notes each and every single day. So many of you are using that in your marketing and your database emailing each and every single day. You also get slides from the show as well as our monthly courses, live streams, and the community. Use code HOT to get 10% off of BAMX. All right. We got a bunch to go through. We've been talking about inventory quite a bit. And I've been making the case that inventory is being driven by certain parts of the country. While inventory is up year over year in the US, it isn't telling the whole story. Super pumped now that Resi Club and Lance Lampert in particular have broken this down for us. So if we look, there are certain states that are driving inventory much more than others. What are those states? Here are the 5 states where active listings are up the most year over year, and then the 5 states where active listings are down. But even those don't tell the full story. I'll explain. The 5 states that are up the most, and I've been making this case, hey, this one is taking off right now, week over week, when you talk about inventory, is Florida, up 45.8% on a year over year basis. There are some locations in Florida that have already surpassed 2019 pre-pandemic levels. So Florida up 45.8% on active listings. Mississippi up 28%. Louisiana up 28%. Alabama up 27%. Arkansas up 23.2%. Do you see a trend there? These are the southern Sunbelt states that you're seeing an inventory boom in. The 5 states where active listings are down the most year over year. Nevada down 32%. Yeah, here's what I'll say about Nevada. I don't think this tells the whole story of Nevada because Nevada was certainly up quite a bit going into that year. So now that Nevada's market has come back, you obviously see the inventory going down. Illinois is down 9.8%, Jersey down 9.1%, Idaho down 9%, and Rhode Island down 7.8%. Those are the 5 states where active listings are down the most. So we're being driven, or the inventory increase is being driven by certain areas in particular more than others. I'm going to take a look at an interactive map. You can throw states in the chat, and I will click on those states. We'll take a look at them together. I do want to point out, I've been talking a lot about the Northeast. They're not on the list, but it's because they were starting from nothing last year. New York down 7.3%. Jersey's down 9.1%. And Connecticut is down 7.6%. Massachusetts is up finally 0.7%. But the Northeast has struggled with inventory while we're seeing these southern states. Look at Texas now. Texas is up 22.8% on year over year shift in active listings. Okay. This whole section here from Florida to Texas and this Sun Belt section here is experiencing an increase in inventory. Even North Carolina now up 17.8% on inventory. This isn't unlike other times in history when you see those Sun Belt states increase their inventory levels before other parts of the country. Not saying that this absolutely means that, hey, the Northeast will experience an inventory rise, but you could draw a correlation to it because it's happened in the past. Right now, Northeast not experiencing it, and Midwest not as much either, although Midwest doing a little bit better. You do see Illinois, which is on the list at down 9.8%. We go to Michigan's only up 2.9%. We go to Wisconsin's up 8.8%. Jersey, as I mentioned, was down 9.1% year over year on inventory. The neighbor to the left, Pennsylvania, is only up 1.1% on inventory. Okay, so the inventory right now being driven in particular by these southern Sun Belt states, and Florida is by far leading the pack. Many flocked to Florida during COVID. Maybe they've changed their mind, or they just bought too many homes. A lot of people in Florida are like second or third homeowners, right? When you look at that. So Florida now leading the pack on inventory, biggest 12-month shift. And when we look at the positivity of the inventory going up across the country, we've got to bring that back down to that micro level and say, well, is that the case for me? If you're in the Northeast, that's not the case. You're at all-time historic low levels of inventory. If you're selling in a Florida, in the Carolinas, in a Texas, you now have more inventory to work with. This is a good thing. This will help stabilize pricing quicker in those markets than in others. It'll give buyers more options, and it'll give you as a real estate professional more to work with, more opportunities in your market. I think the markets that are down inventory are envious of that situation. We're still well below 2019 levels nationally. There are certain pockets, certain markets, Punta Gorda in Florida, which is referenced here, Cape Coral, above, not only above year over year, but above pre-pandemic levels. But most of the country is well below pre-pandemic levels. To get back to 2019 would equal a more even market between buyers and sellers. You can almost say in every market, it's still a seller's market. All right, so there's your update on inventory, which we've spoken about quite a bit. Florida is driving the biggest surge by far on inventory here as we are into March now of 2024. All right, big news this morning on inflation. It's created another pop in the 10-year Treasury yield. When you miss an inflation report, like we did today on the PPI, not only miss, but we came in more than or just at double what the expectation was. Then we see this 10-year Treasury yield pop, and that's what it did here once again today. You see the increase now. I'll go to the 1 day. If you're watching here, you see the chart is just straight up at 8:30 a.m. when the PPI reporting comes out. It actually started moving a little bit right before 8:30, probably based on expectations that PPI was coming in a little hot, and now sitting at 4.251. We're over the 4.250 number, which we tend to watch closely on the 10-year Treasury yield. So we're not happy with that, but that's where we're at. The PPI for final demand rose 0.6% in February. That number was supposed to be 0.3%. That was the expectation from Dow Jones. That's what it was in January as well, was 0.3%. You can see here on the PPI price index, you can see the pop on final demand goods. And listen, this is where we're at with inflation. It's why I wasn't, coming into January 1, despite the December we had on rates, I wasn't going to sit there and try to pretend like somebody was going to come down the chimney and save us. It was pretty obvious that inflation was going to have a bumpy road. There's strategy, and I think the future is absolutely bright for agents. And I think this is going to even be a more fluid market. Inventory is going to be great for agents. That's going to bring great opportunity for agents. So there's strategy. There's knowing that the future is bright, that the level of transactions we saw last year can only go up, right? There's all those things. And then there's I'm not just going to pretend like a 5% 30-year fixed is going to show up here for the spring market. Not the case. We'll probably be up over 7% today on the 30-year fix off of this news. Okay. So just more bumps in the road for this fight against inflation. Not the end of the world. It's one report. It's one hot report. The PPI, the producer price index, comes out the day after or 2 days after the CPI. We have this report now. We know it's a little hot. It is what it is. Prices for final demand goods increased 1.2% in February. Nearly 70% of the rise attributed to index for final demand energy. That reflects what we saw in the CPI 2 days ago. Energy's up. That jumped 4.4%. Notable increases were observed. Price for gasoline, diesel fuel, chicken eggs. Chicken eggs. What other eggs are there other eggs that I'm not aware of that we're consuming? There probably are, and I sound like an idiot right now, but chicken eggs, Beef and veal, while decreases were noted for hay seeds, oil seeds, as well as for iron and steel scrap. Okay. Moving into retail and food services sales for February 2024. We also had a report on that. That shows a 0.6% increase from the previous month and a 1.5% increase year over year. Now, the 0.6 increase from the previous month is a rebound, because if you remember the previous month on retail, we were down. Okay, so the consumer has recovered, not to the expectation that was out there at 0.8% on that particular measurement. Okay, so a rebound there for retail, which tells you what? Okay, what does the rebound in retail tell us? What does that even? What does this even mean? This monthly sales for retail and food services, monthly retail sales estimate will be revised, blah, 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 revised, not adjusted, announce the following estimates. And then there you go. There's the 0.6%, the 700 billion for February, down 1.1% in January. What does that mean? Consumers in better shape February than in January. So, okay, while we have inflation going up, we still have a strong consumer. We still have a pretty strong jobs market. And that's why this is such a tricky balance here. Usually everything goes down together, and that's not the case right now. We still have a very strong economy, which is one of the things that flustered the Fed. It's one of those things that has them cautious about cutting the rates. Right now, the expectation is May, and they're holding back because they want to make sure that they're not going to cut too soon. Okay, so that's your update on the retail. I don't think there's really anything there for us. No, there's nothing there. We've also got weekly unemployment numbers this week. The weekly unemployment numbers decreased 1,000 to 209,000. The expectation was a little higher than that. So less unemployed than what was expected. Okay. Number of insured employment claims increased 17,000 total to 1.811 million. Really no change here on unemployment. Pretty much staying flat with where we've been. Kind of a steady job market. Unemployment not moving up much. Until unemployment dramatically increases, you can kind of put the recession talk to bed. Even though Jamie Dimon from JP Morgan, CEO JP Morgan, was on his soapbox again, I think a couple of days ago, talking about a recession. He kind of has been rolling that one out there every quarter here. He was wrong all of 2023. I'm not saying he's gonna be wrong in 24. It's something that he believes it has I think 60% chance is what he said. But until you see unemployment really dramatically go up, you're not likely to see recession. If unemployment dramatically goes up, you would see a 10-year going down, unlike what it's doing today, which would bring the 30-year fix down as well. 30-year fix, speaking of, yesterday ended the day still below 7 at 6.94. So that's 6 straight readings below 7%. It's hard to imagine we're not going to end the day here up over 7% based off of that 10-year read. Last week's, we'll get the 30-year fixed weekly today. Last week's was 6.88. I actually think that'll come in down just based off of the last week. Should be maybe closer to 6.8. But there you go on the 30-year fix. That is your hot sheet here for the week. The show notes will be uploaded into BAMX for you. By the way, BAMX members, we are going to be, I think it's next week, we're going to be releasing that BAM camp that we announced, BAM Camp DC, out to the public. So tickets are already selling. If you want to make sure you secure yours before we release that to the public, make sure you go into the BAMX community or onto the events page and grab your BAM Camp DC ticket before we make announcements into the public. BAMX members, of course, you guys get 25% off of those events. All right. That's what we got. Hope everybody is doing well. Have a great Thursday. Hot Sheet will be back on Monday. Knowledge Brokers, of course, over on at Knowledge Brokers Podcast tomorrow. And I'll see you back here for the Hot Sheet Monday. Until then, of course, toodaloo.